We are going to do part 2 of our self-employment information that we started speaking about last week. And what I wanted to do today is expand it a little bit and show you some of the documents that, you know, you and I have to use, especially the mortgage side. We've got to use these documents specifically when we're looking at certain self-employed borrowers. So what I thought I'd do is I'd take us through each of these. Again, you're not going to remember all of this. You don't have to. But it's important that at least you can say with some level of confidence some of the terminology. And if you know where things are, it'll make some sense. And then when you're, think about this. Most borrowers that you and I speak to, they have no clue what we're talking about. If you refer to it and say, Form 1120S, do you know most people have no idea what Form 1120S is, unless you're either an accountant, a CPA, or somebody like us. You just don't know because you don't pay much attention to it. Your accountant does it, your CPA does it. You and I don't typically do it. So that becomes important. So just even saying some of those things, you refer to a K1. They probably heard the term K1, but really don't know what it is. So just knowing some of that terminology. So what I want to do is take you through these forms a little bit so that you understand what the form does, what it says, and how we as a lender might use it. But I'm going to start with the very simple first. This is one that you and I see. Wow, that's huge. How do we shrink this down a little bit so you can see the whole form? Okay, can you see that, or is that too small?
That's too small.
All right, this is nothing more than the 1040. It is the form that you and I fill out every year, or our accountant fills it out every year, that shows how much income we've made and where those categories of income happen to be. And then on page 2, it shows how much tax we've paid and how much tax we owe. So we go right over here. You'll notice line 1, wages, salaries, tips, right there, line 1. That's where the W-2 income goes. Now, like we said last week, generally speaking, if it's a W-2 employee, they're probably not self-employed unless their S corporation is paying them a W-2. That W-2 income is going to show up right here. So just seeing W-2 income does not mean a person is not self-employed. They still might be self-employed. All right? Now, you may not be able to read it all, see it all, but go down here, capital gains, other income from Schedule 1, line 10. Now, Schedule 1 is where Schedule C flows to Schedule 1, which then flows to page 1 on the 1040. We're going to go look at the Schedule C in a moment. But at the end of the day, taxable income is right here. Now, if you're a W-2 employee, and you really are a W-2 employee, I'm not worried about what shows up here. I'm worried about what shows up here. All right? Unless some of these other categories have a different impact. But now we go to page 2, and this becomes important as a lender, because over here it says this is a refund if you're getting a refund. Over here it says how much you might owe based on what you've paid and how much you still owe. So as a lender, one of the things we have to do is look at page 2 to make sure we don't see anything over here on line 37. If we see something on line 37, the very next question we have to ask, has that been paid? Have you worked out an agreement with the IRS, or when will it be paid? And that's for any borrower, self-employed or not. Jay.
So does it have to be paid, or can there be agreement?
They can have, good question, does it have to be paid, or can it be, can they have payments? Yes, they can have payments, but it has to be worked out with the IRS so that in fact, they've got a payment plan and they have to make 3 payments. So it's not just that there's a payment plan. You've got to be able to show that you've made 3 payments. Now, because I want to talk more about self-employed, let's go to one of the forms that I think is very important. Let's go to the simplest one, Schedule C on Form 1040. If you're looking at someone's tax returns, first is going to be the 1040, then you're going to get to Schedule C. Now, this is one that many of you probably fill out. Now, when I talk to people, generally speaking, if I talk to someone who's a hairdresser, they're in the hospitality industry, or they're in the movie industry, or they're in the handyman business, or whatever, a multitude of things, real estate agents. And I ask them how much money they make. And I'm very careful how I ask that, because the very first thing they tell me is what's on line 1. So if I ask somebody how much money they make, they think, well, gee whiz, I made $110,000 last year. And that's the number that appears on line 1. That is not how much money they paid taxes on. It's how much money they brought in. That's why it says gross receipts or sales. That doesn't mean that's how much money you've paid taxes on. It simply means that's how much money you brought in. That's what the 1099s are going to show, if there are 1099s, or if you're paid in by people giving your business checks or something of that nature, you'll add it all up and you'll put it over here. In your case, it's pretty simple. You get a 1099 from the team here, and then you put it up here on this line. I'm not going to worry about these other lines because they typically don't apply to many people, although some, but not many. Now, this is what's important over here. Look at this. These are all the various categories of expenses. And I don't think I've ever seen a Schedule C where there's only income and no expenses. I've seen some with very little expenses, but I've never seen one with no expenses. Now, the beauty of being self-employed, the beauty of being an independent contractor, as you are, is that you can put a whole bunch of things in here. And those funds reduce your income tax liability. So if there's $110,000 up here on line 1, but you spent $5,000 on advertising, your car and truck expense was $6,000. There's pages that go behind this that feed into this document, but just the summary document's okay. Depletion and depreciation on your business, you're probably not going to have any of that, but some people do. And then we go over to office expenses. You might have $3,000 or $4,000 of office expenses. If you have to rent a building or rent space in a warehouse, some businesses have to, that might show up there. Repairs and maintenance, if you got to take care of things. And then there's one category down here, expense for business use of your home that your accountant may use, and you'll put a number in there. So you add up all of these expenses, and then you subtract the number total expenses, subtract out of from your home, and you end up with a number on number 31. So we said line 1 was $110,000. Line 31 might only be $72,000. So the person I'm speaking to says, oh, I make 110. How much you pay taxes on? Well, I don't know. Okay, if you look at your Schedule C and tell me what's on line 31. Whatever's on line 31, that's what I can use for income. Now again, there's a couple things in here I can add back, but not anything significant. So this becomes the number. So whenever somebody says they're self-employed, if all you'll remember, are you on a Schedule C if you're not a sub S? And if they say yes, just remember, say, I don't need to know what you're showing on line 1, I need to know what you're showing on line 31. When you say that, they're going to look at you like you are speaking a foreign language, because they're not going to know it themselves. But you know what it does say? It says, you're competent. And now, because you know more than they do, without saying that you know more than they do, you ask them a question they don't even have a clue about. Now, all of a sudden, what happens? Uh-oh, I think I better trust this person. So that's how you can use having just a little basic information. Or you can say, hey, when you turn in your tax return and Schedule C shows up, you can bet the first thing Greg's going to look at is what's on line 31. If you say that to them, they're going to be like, what are you talking about? But again, it shows confidence that you have, knowledge you have, they don't know. And that's all we're trying to do. So I'm educating you on some of this, but more importantly, how you can use it, that you can develop a higher level of competence with your clients without having to decipher any of this garbage. Make sense? All right, questions before I go on? All right, so we've got the 1040, we've got Schedule C. Let's go over here to, now, if somebody is a sub-S corporation, this is going to look a lot like a Schedule C, but it's called the 1120S form. And by the way, there's a lot more forms than all this that go into tax returns, but this is the basic stuff that we have to look at. We take our information from. So you'll notice on Schedule C, up here, gross receipts or sales, Form 1120S, gross receipts and sales. That number goes in there. So if somebody is an S corporation, might be a real estate agent, whatever they've been paid in their LLC, the sub S, it'll go right in, that number goes right in there. Now, just like on Schedule C, that is not how much money we can use. We have to go back down here into expenses. Now, you'll notice there's a bunch of other stuff in here. Don't worry about it for the most part, because the number that's in 1A in many, many cases is also the number that's in number 6. If it's a more complicated return, different story. Then there'll be other information here, but that's not for you to worry about, that's for us. But just, if you'll remember, gross receipts or sales are going to be in here, total income is going to be right here, much like what you see here. Okay, line 1 and line 7 are probably going to be pretty much the same in most cases. Now, you'll notice some of these categories are slightly, some of them are the same, but some are slightly different. Remember I mentioned that some self-employed people will actually have W-2 income? Well, compensation of officers. There's 2 different ways they can pay themselves. They can take a distribution or they can just pay themselves a salary. Many of our self-employed borrowers, in fact, I was with one of my real estate agents last night who I do a fair amount of business with, and he and his wife, they're on salary. They take a small salary. Not a lot, but take a small salary. And so that goes on line 7, W-2 income. It doesn't mean he's not self-employed, okay? Doesn't mean that. He is self-employed, but he does get W-2 income. Salaries and wages. If in fact you're paying someone, if you have an assistant that you pay, not that Mike pays and Karen writes a check, that you pay for, well, that might go in this line over here. It's an expense. So right away you can see if you've got expenses here, that comes off of line 1A and line 6. You got all these other categories, blah, 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 blah. Ordinary business income, line 21. So whatever shows up here on line 1 and 6 is not going to be what we're going to use to determine how much you qualify for. We're going to use down here, well, line 21 is going to be a guideline for us, because in the mortgage industry, we have to use something called a K1. So we just do everything we can to make this complicated. And frankly, it's not so much us as much as it is our infamous government, because all of this information here flows to something called a K1, let's go get the K1. That's this here. Now the K1 tells some very important information. All right, one of the first things the K1 shows is it shows how much of the ownership do you have in this corporation. It's a sub S corporation. How much do you own of it? Do you own 50%? Do you own 100%? What is it that you own? It's not uncommon if it's a husband and wife that we'll see 50-50. All right, that can happen. Or it might be someone like yourself who just says all of the sub S corp income comes to me, or I own the whole thing. Whatever it is, we're looking at this page right here to see that. Now we go up here, and we're looking for what's called other income. Now, ordinary business income or loss. That's coming from here, right over here. This number flows to over here. But that does not necessarily mean that that's the income. Because what you don't see, you see somewhere it says line 16, there's something called line 16D, like David. That's distributions. That's money that the owner has taken out of the corporation in other than their salary, whatever it happens to be. They took it out monthly, they took it out quarterly, they take it out twice a year, they take it out whenever they just feel so motivated to take it out. That's going to be in item 16D. It's called distributions. And so the money that we can use as a lender might be, we're always going to use the W-2 income, always going to use that. In addition to that, we might use line 1 or we might use line 16D like David. It depends. Weird formulas to look at all that, but that's what we do. For you, you don't have to remember all that. What you need to remember, if you're a sub S corporation, you have an 1120S that flows to the K1. If you say that to most people, they are like out there. They're like, what did you just say? Were you speaking Greek? Because I don't know what you're talking about. I know my accountant fills out a K1, but I have no idea. That's what most people say to me. There are some who are pretty astute. They have a pretty good idea of what goes on this document, but most do not. So anything you know is much more than they know, which makes you look more competent. And that's what's important. The more you, and again, it's not being arrogant in front of them. What it really is just trying to build up confidence that they're just going to say, Jay knows more than I do. I better listen to Jay. When Jay helped me and Michelle out this past year and the year before that, you know, whenever she would say something to do with repairs or something to do with rent or the tenants, Jay would say something, I just say, Jay, just, that's fine. I don't know what you're talking about. Just please take care of it, will you? Because I didn't know and I didn't want to know. I had confidence in her. That's all you're trying to build up with your self-employed borrowers. Some confidence that you might just know a little bit more than them, maybe. In most cases, you do. There are going to be some people who are extremely astute. They're probably the engineers of the world. They're probably the accountants or some lawyers. You know, they might know quite a bit about it. But other than that, not many. Now, once we get all this, and this information flows into some documents that we as lenders use, which I won't put up here, to calculate how much income we can actually use. And again, like I said last week, if you've had the business for more than 5 years, it's very likely we're only going to have to use 1 year of income. If you've had it for less than 5 years, we're probably going to have to use 2 years of income. If you've had a declining income, we're probably going to use 2 years of income, even though we're only going to use the most current year. So there's a lot of different variables. But we're going to go to these documents here to make those determinations. Okay? Now, sometimes we go to this document and we want to use this line instead of 16D, or we want to use 16D instead of line 1. And then as a lender, we have to make a little bit of an argument to underwriting and say, this is why we want to do it. Well, that takes us to another document, called Schedule L. Schedule L is where the balance sheet that shows how much money do you really have on hand. And again, there's a little form we fill out, but basically what it shows is cash on hand at the end of the year is right here. This is how much money you had on hand. Then if you go down some of these various things over here, you'll notice that 916 says accounts payable. Accounts payable are debts that you have not paid at the end of the year that are due. So we're going to look at that. Any other liabilities that might show up, mortgages, if a person owns a building and there's a mortgage on it, how much is that? What do we? And then we take the numbers off of this page, plug them into what we call a liquidation sheet, and we look at how liquid are they. And if they're positive, if their liquidity is positive, then as a lender, we can go back to this form here, and we may be able to use either 1 or 16D, whichever we prefer, it works out to our benefit. But the liquidity of the company is based off of what comes on Schedule L. So L, liquidity, that's what this is. Again, you don't have to worry about filling any of this in or figuring it out. That's our job. But when you hear someone say the term balance sheet, just know that that information's coming off of Schedule L on the 1120 on the self-employed tax return. Now, I dumped a bunch of garbage on you this morning. Questions?
The Schedule L, is it just for S-Corps or is it for any business owners?
Well, S-Corp primarily, but every business has a balance sheet, okay? Every business has a balance sheet. Even Schedule C on a tax return does a balance sheet. The balance sheet simply shows this is what I had at the beginning of the year, this is what I've got in cash now. Now, on small businesses, it's not uncommon for the balance sheet to show 0 because you've taken all the money out of the company before the end of the year. You may or may not have. On big businesses, that's not the case. There's usually going to be some type of reserve that's kept in the company, and so the balance sheet will show some type of positive number. I know when I had my company, we always kept a fair amount of money in the corporation at the end of the year because we didn't know when we were going to have a rainy day. So those reserves were very important to us.
So can you get a balance sheet, I guess, outside of the tax returns for the person?
Yes, they can, yes. Like for example, good question, Ami. If I'm doing a self-employed return right now, I'm gonna ask them, generally I'm gonna ask them for their P&L. Sometimes we ask them for a balance sheet. So they're gonna produce the P&L and then they're gonna produce a balance sheet based on this year. They haven't filed taxes yet. They're just gonna base it off of where they stand this year. Where were they at the beginning of the year, and where are they at the end of November? And again, it's not that big a deal. It's pretty simple to calculate.
Yeah, so my last question, when you pre-qualify someone who is an S-Corp owner but is applying as a W-2, do you consider them as a W-2 or do you consider them as a business with a
Okay. W-2 does not mean you are not self-employed. Okay? Self-employed can have W-2 income. We're always going to use the W-2 income, but we still have to do the self-employed analysis. All right? Does that make sense?
So if you have someone that is going self-employed and they have income that's not related to business, is that where you get into
Such as?
Let's say they have a tenant that pays them rent, something like that, but the property is personal, it's not business owned.
Okay, let me ask this. Is that rent paid to them in cash, or is that rent paid to them in a form of a check that they put on their tax returns?
Let's say it is a check on tax returns.
Okay, we didn't even look at that. There's something called a Schedule E, like Edward. If you own real estate that's not in an LLC sub S, it goes on Schedule E. And you list the properties. I didn't put a Schedule C up here, or Schedule E, but on Schedule E, you can put 2, 3, 4 properties, and then if you have to go to more sheets, you can. And then you have to, it shows the number of days of rental, usually 365. Then it shows how much rent you collected, kind of like that, somewhat like what you see up here. It's a different form, but it'll show you how much rent you've received, and then you have all of these expenses, which then shows what your net is. That's why people say, well, Greg, you know, my payment's only $1,000 a month and I'm collecting $1,300. So I'm making $300 a month. Not really. Because again, when you go to Schedule E, you're putting in $1,200 a month, which, you know, in that case is roughly $14,400 a year. And then you're going to have expenses. And then you're going to wipe out all those expenses. Now, in the case of rental, you're going to, if it truly is an investment property, you have something called depreciation. Well, depreciation can be added back. So whatever that depreciation is, we're going to add it back. So we're going to subtract the expenses, add back the depreciation, add back the depletion, add back any one-time expenses that you may have had that are not recurring, if you can prove that. And that's the number we can give you credit for. And oftentimes, most investors, as I'm sure Jay can verify, that number is almost always a negative number. Why? They don't want to pay taxes.
So you get creative to make it a loss?
Well, I don't want to say that anybody does this, but if they own a piece of rental property and they have a primary residence and they're getting something done to primary residence, I wouldn't be surprised if that invoice is written on the property that they have an investment property on. I didn't say that, but I've heard of that happening.
So this is a specific question about, so say there's a property and the tenant didn't pay rent and there was still a mortgage payment, so it's gonna end up being negative. How does that reflect back into their income? They end up getting,
The income only shows rents they've received.
so say they were supposed to receive, they didn't receive rent for an entire year,
Okay,
but they paid a mortgage payment on that property.
they're going to have a whole lot of losses for that year.
And it's gonna reflect or be debited from their income?
That's correct. Yep. Yep.
So they lost, but they might not have.
That's right.
really lost.
They lost in those cases. Yes.
How many years of balance sheet and P&L do you need?
How many what?
How many years of the balance sheet or P&L do you need? Like 2?
No, well, the P&L is only 1 year because we're getting your tax returns for the previous year. The P&L is simply to show us this year that your income this year is consistent with what you're saying or what we're saying you made in the previous year.
Okay, so they would actually need, do they supply you with the W-2s?
They're going to give us W-2s, 1099s, and tax returns, the whole thing. Now,
Okay.
since COVID started, it's not just the P&L that we have to get. We also have to get anywhere from 3 to 6 months bank statements from the business. And that was as a result of people believing that P&Ls might be fudged. And so the way that they've combated that is to say that we've got to provide them with 3 to 6 months of bank statements that show the necessary deposits coming into the business bank account that jives with the income that you're showing on the P&L. So if you're showing that on your P&L that you're making $5,000 a month, and that's consistent with what you showed on your tax returns the previous 2 years, that's great. Now we're going to look at your bank statements to make sure there really is $5,000 a month coming in. Okay? One more, then we got a break.
So I wonder how much, I guess, filing for an official business affect your approval. For example, let's say I'm working, I have a W-2, but on the side, let's say I do hair, but I make way more money doing that on the side than my W-2, but officially I'm not a business. So which income?
I'm going to okay, I'm not sure. Okay, so you're a W-2 employee, you have a full-time job that has nothing to do with your,
Hey, yeah.
Okay, so you're making $3,000 a month on your W-2 job.
Yes,
And you have a side business that you're getting paid on.
yes.
Where do you file that business? Where do you put that income?
I'm getting cash.
If you're getting cash, we can't use it. We can only use income that you put on your tax returns. If you don't put income on your tax returns, it's not, as far as we're concerned, it's not income. Does that make sense? Does that answer your question? Because there are people who get cash who never file, who don't do this. But then we can't do their loan because they don't have any income.
So there's no way they could come back and use that income in some way?
If you want to do a non-QM loan, going back to what we talked about a few weeks ago, maybe. Maybe. Because if you're not filing a tax return, that means you're not showing that you're self-employed. How do we know that you're self-employed?
In that situation though, if she's getting paid just cash and she reports it on her tax returns as.
Gross receipts.
As other income, right?
Well, it'll show up on, it'll show up here. It'll show up here. Right there. You're going to put in how much income you received. Say that you got say that you got $50,000.
Well, my question was, how does she, if in the, let's say, underwriting process, they ask for sources of that income, she can't really source it because, I guess you would have to.
Yeah,
have
listen, I'm
business
just
records.
doing hair, so I have no record of when, but I just deposited that money in my bank account and I told the IRS, yes, I made $50,000 extra doing that, but
Right.
there's no, since it's not an official business, there's no way for me to tell you exactly how, you know what I mean? Like, besides telling you I did hair. I can't
Okay.
tell you I did hair.
I don't want to keep everybody, those who want to hear the rest of this, because this is important. I don't want to screw this up. I want to make sure we say it right. But if you need to leave, go ahead. Otherwise, I'll keep answering that. If you're putting the income on here, that income is coming from somewhere. All right, as a lender, I'm going to look at your Schedule C and I'm going to make a determination that says line 31, you're getting $50,000 here, but over here you are $35,000. Okay, so I'm going to use $35,000 of income. Now, we're 6 months into the new year, and I'm going to use your 2020 and 2019 Schedule C, and they jive. It's about $35,000 each year. Now I'm going to ask you for a profit and loss statement for 2022, because now we're in July of 2022. I'm going to ask you for a P&L for the first 6 months of the year. And you're going to give me a P&L that is going to jive with what's up here, about $4,000 a month of income. Expenses we're just going to assume are basically the same. And I'm going to say to you, okay, that's all well and good. Now I need to see 3 months bank statements that show that $4,000 going into that account. If you can't show that to me, you're not getting a loan, not a traditional loan. Okay? Does that answer the question? Does that help? No? Yes? If you're getting cash and you are not putting it into the bank, you're sticking it into your safe at home, and then you're just first of all, I've never met a person who arbitrarily puts a number up here. Because if they put a $50,000 arbitrary number up here, they're going to pay a whole lot of federal income tax if they're getting cash that they wouldn't otherwise have to pay if they just took that cash and stuck it in their safe at home. So I've never met somebody who's done that. Usually if they're doing this properly, they're getting paid and they're putting the money up here. They're getting paid checks, and those checks they're depositing into their bank account, and then those bank accounts add up, and that's the money that goes in here. That's generally how it's done. Now, I'm not going to say that. That's fine. Okay. That's generally how it's done.
Just in the case where when they feel like, okay, my W-2 cannot qualify me for the amount that I want, but what about the extra income I have on the side? What do I do so you guys can use that money? Then it's like,
I can use the money if you're putting it on your tax returns. If you're not putting it on your tax returns, I cannot use the money. Let me, what's that?
And putting it in
and put it in a bank. Let me ask the question this way. I'm going to do a loan for you. I ask you where the money's coming from the down payment, and you say, I got it. I say, okay, where do you have it? And you say, well, I've got it in my safe at home. Can the lender use that money? Why not? It's not sourced. So if I can't use the money for the down payment, why would I be able to use the money as income? If we can't source that money, it doesn't count, period. That's the bottom line. You can't even do the bank statement loan unless you can prove that you've got the deposits coming into the bank.
So can I just ask one question?
Sure.
She's referring to that. Well, let me look at it this way. If you're dealing with someone who's international, who's paying taxes in another country, bank account in another country, lives here in the same thing, what happens then? Because if the person can provide information from England or wherever they live and work out here, how does that have to work?
They can
Do
put.
I have to disclose it on this American tax document?
Yes. Yes, we have to. Or we have to put them in a non-QM loan that would allow them to do that. We have a customer right now, and they're getting money from the country where they've got quite a bit of money. And what I've told them is get that money into your accounts here so that we're going to have 2 months bank statements where we don't show the deposits. They're easily qualified for the loan, but they've got all this money coming in from someplace else that I don't want to see because I don't want to source it. I don't want to source the money coming from overseas because that's a pain in the butt. I'll do it, but they're not going to like it. So I gave them their 2 options, and they said, Greg, that's easy. We're just going to put the money in the bank now, and we'll buy a home that closes in March. I said, perfect. All right? So 2 months. 2 months. 2 months when I don't see the deposit. Ami, go back to you for a moment. If somebody's getting cash and they're not claiming that income, cannot use it, period. Cannot use it. And there's a ton of people who are like, but I'm getting all this extra money. I house clean, or I do side jobs. I do all this. I don't understand why I can't use it, because you're not paying taxes on it. You're not paying taxes on it, nothing I can do. All right? We have gone way over, but thank you. Appreciate it.